My guest today is Russel Karas, Head of Commodities at Xpansiv. I had the fortune of working alongside Russel first as a partner and then a colleague. He is a towering figure in the VCM and I am delighted to call him my friend. Russel played a pivotal role in developing and launching the first futures contracts for the VCM, the Global Emissions Offset, GEO, and the nature-based equivalent, N-GEO. He continues to innovate and advocate for the market at a time of critical inflection. This has to be one of my favorite conversations on the pod. I hope you enjoyed as much as I did. Welcome to the Carbon Exposure Project. Russ, it's
Rene.
A pleasure to see you, man.
It's great to be here.
Yeah, of all places in Dubai during COP.
Yep.
It's a genuine pleasure to see you. We've had an amazing, run.
For sure.
It's been a pleasure to be your colleague and contemporary for a while here. You played such a significant role in the VCM in helping this market mature and grow. Can I just give you your flowers here?
Because, well, I appreciate that.
No, man, I'm sincere, and it's you are definitely one of my favorite people, but it was an absolute privilege to work with you. I just want to put that on camera. I'd love for you to contextualize your journey.
Sure.
For people that know you, you know that you spent a long time at CME, and now you're head of commodities at Xpansiv, which is a pretty significant role. And I'd just love to hear your journey for the audience.
Sure.
To provide that if you can, and then talk about what's happening in the market. It's been an incredible time to be in this space. A lot of dynamic change is happening. So maybe the floor is yours, man.
Sure. And we think there's a lot of promising developments as well as we've seen at COP.
Yeah,
it's taking time. You have to be patient.
Be patient.
Ups and downs like any commodity market.
Completely.
We're getting there, right?
I think so. All we need is sleep.
Yeah. Not this week. Like we said, one meal a day, 3 hours of sleep a day. Right?
Lots of meetings, but that frenetic energy is incredible because I think it starts to pay dividends in the short to medium and long term for sure.
Yeah.
So it's pretty exciting.
Yeah. So my journey, I started in environmental consulting right out of school.
Mm-hmm.
I went to NYU, created a climate finance degree at the Center for Global Affairs. And, that's 2008. Barack Obama's elected. We're definitely going to have a national cap and trade program.
Oh my God, the sense of optimism.
Everything's going great. And then, as I'm writing a thesis on harmonizing carbon markets, I'm interviewing Green Exchange and traders and Point Carbon, and everyone's telling me, you should probably diversify a little bit. We focused on healthcare in the US, didn't get a climate bill passed, and carbon trading, really hit kind of a lull for 10 years.
I hit a wall.
They hit a wall, yeah. So, but I had kind of pivoted my thesis a little bit, still focused on carbon markets, went to CME as an analyst and kind of worked my way at CME for 10 years in oil, but also in environmental products. So I ended up running the North American crude business at CME. So WTI, gasoline, diesel, so 3 out of the top, 5 actively traded commodity contracts in the world. But because I was running that business and was doing okay, I got to still launch environmental products. So we launched the first RINs contract. I don't know if you remember RINs Sanity.
Yep.
Right. And there were certain trading houses thought that was going to be the next big environmental contract.
I remember NSCW during that time. It was palpable.
Yeah, it was a massive impact. A few cents to over $1 is a huge impact. And then with CBL actually in 2016, we launched CCA futures, right? But into a very competitive market. We had a little bit of a differentiated product, and just stayed with Nathan Rockcliffe and Ben Stewart, kept in touch. We knew CBL was on the cutting edge, right? Between water, environmental products, REX, carbon, and I was also pursuing an MBA at the time at NYU. And then when 2019 hit, that's when we started to see this ESG momentum pick back up, and that's when at CME our shareholders came to us and said, what are you doing internally? How do we manage this ESG risk in terms of our portfolios, especially across commodities, but also things like equities. So all of a sudden, I started to get more resources and kind of more political capital to explore different environmental contracts.
Yeah.
And at that time, CBL had also started with the IATA partnership, right? Corsia was getting closer. And we with you and with Ben and with Nathan, we said, this is what we need to do. We were actually thinking about doing an LCFS auction. That was our next project. We were talking to CME Legal about it. That was going to be our next kind of CBL CME collaboration. But once these pieces started to align, we're like, this is it. And in our head, you can think about how do we design other commodities contracts?
Yep.
This has that component. You have multiple registries, just like in oil, you have multiple terminals, multiple delivery points. And we're literally just, in the CME office whiteboarding, like, how would GEO be set up? How would it deliver? It should be financial, should be physical. So that was the biggest launch in terms of customer outreach in CME Group history.
Wow, that's amazing.
It's just like,
that blows my mind.
Yeah, and it all, was coming during COVID times. So, as you know, you're on Zoom's 10, 11, GEO calls, just really telling people about the VCM for the first time, the credibility of ICAO and the technical advisory board, and you have to tell that story in 30 minutes and getting people on board and set up. And a big part of my educational journey is thanks to you. Well, we spoke every week, it was like every Thursday morning. It's kind of like VCM 101, whatever, 102, 201, until we got all the way into the weeds by the time we were launching. So GEO would not have happened without those sessions and the guidance, and from you and from Ben and from Nathan.
Man, sure. It was like the best time in my career in Journey, and having you essentially as my Sherpa on the future side, right? We're creating effectively this potential for derivatives and unlocking this gateway towards the financial markets and inclusivity for them to participate in carbon. It was incredible. Like we, mentioned Nathan and Ben, who are the founders of Xpansiv, started CBL 2009. And I joined in 2015, and it was the best ride of my life. Working under them and getting to this point, we were the little exchange that could, and then having that cosign, that validation from CME was just incredible for us at the time, and it led to, like you said, this exponential growth with regards to interest. It's fascinating to hear what you said around the GEO contract being the biggest outreach in CME's history in terms of product launch. It was incredible, but our naivety, I speak for myself in that third person, but it was incredible. Like, we didn't know any better. And so we just did it. Like the outreach was a pleasure working with you and your team. And we felt so much support, and it was so constructive, not only bilaterally between CME and CBL, but also with our participants. Right on the spot, and also futures. And we were onboarding a number of participants to be able to settle on the spot, on the physical, that are coming from the CME ecosystem. These are super sophisticated financials that are now coming into our physical settlement ecosystem, let's say. And everybody, there was just this perfect confluence of factors. Effectively, it was a perfect storm, and it was amazing. So thank you for that. You were instrumental in helping get that through just the regulatory purview of CFTC, which is not an easy thing to do. And everything seemed to just work great. We had green lights all the way to quote that Matthew McConaughey kind of truism. But it was incredible to see that. I think, the results were really interesting and impactful. I think you're right. We had this on the CBL side, great support and work being done, and sort of late 2018-19, when we then announced the partnership with the International Air Transport Association, IATA, for the development of the Aviation Carbon Exchange. And then in quick succession, the partnership with CME to launch the GEO, which is a quick, linear, let's say, evolution of that, because we saw potential significant demand coming from the aviation industry. Now, if we fast forward, we launched the GEO spot, we create sufficient liquidity. You launched on the CME.
45 cents, right?
Yeah, it was incredible. Like, and there was no expectation of greater kind of numbers. The market had been in the doldrums for quite a long time. There was kind of apathy and a lot of demand. And then the contract launches, CME announces the futures contract is to be launched. That gave legitimacy. The price starts to appreciate. You start to see bottlenecks with regards to supply. Market gaps up. We hit at a $1, a $2 level. Then it hits $4, and then it starts to run. I think we ended up at just above 8 with regards to the price. Yeah. So you saw an 800% return on that asset class in the space of a year. Quick succession, you and your team and my team also then responded to the client demand, effectively talked to a number of the same participants and said, hey, the
a KO market is great, but you need to be reflective of the market overall, and nature-based solutions warrant a contract of their own,
Yes.
which then, we were exhausted from that development of the GEO contract and then the launch, and then we're responding to the market asking us for another contract. The N-GEO, I think, was even more incredible in terms of the appetite.
Just from the launch. Yeah.
It was like a rocket.
It was different because we had spent so much time getting firms prepared. Like the day one when GEO futures started trading, I think it was March 21st, sometime in March, because CBL had launched the spot that fall, like in October, November, and then we launched the futures in March. I mean, I sat, but my back didn't hit the back of the chair the entire morning because I had to go get traditional market makers that didn't know the VCM to come up and put bids and offers on screen. You know, that gives people confidence in the market. They see, the screen is really like the gold standard of commodity markets.
Yeah, markets in general reacted to the psychology, and they start to see bid and offer spreads, and the screen light up, and then everybody thinks that they're missing out on the party, and they did, and then it just started to go.
And then we saw the blocks come in, and then by the time N-GEO, we saw blocks at 50 and 100, and we're excited about that. Open
blocks meaning the clearing of transactions between bilaterally settled parties.
Privately negotiated trades that are then input into the exchange.
Yeah, which is incredible, leveraging the clearing and settlement mechanism of an exchange. So, we've got viewers who might not be familiar with that nomenclature. Sometimes I'm very guilty of talking inside baseball.
Yeah. And then, but by the time we got to N-GEO at the end of the summer, I think we launched it in, I can't remember if it was August. Then we were seeing like, instead of 50, instead of like a few lots on screen, we saw like 500, 1,000 lot blocks going in.
And that's 500,000 tons to 1 million tons
that's
being transacted. Now that we're entering real significant volume.
Yes.
And that's why,
And we've launched oil contracts in established markets that have not had that traction. Many contracts have not built that fast.
And that's the thing. A lot of people forget that. And that context, again, naivety, right? On the carbon side, we're just like, oh, okay, cool. I guess this is how it always is. It wasn't. It was a very special situation. And as you said, it was an incredibly successful launch of a new contract that reached significant liquidity and open interest in a very short period of time. I think that, it delivered on more than the promise effectively, right? It was a very successful contract launch. In end of 21, the open interest on the N-GEO was millions, tens of millions of tons. I think it was like 21 million OI in terms of equivalent tons. It's pretty significant.
Yeah, but so at that point I could see we had these benchmarks, but that there was still so much development, so many details, and the deeper that you really dug in there. Yeah, I realized that if we're really gonna develop standardized contracts, it's going to take too long to get to the future stage. And so that's why, because of the work, but also because of the team. I mentioned obviously you and Ben, Nathan, but
and Scott, the broader team of just incredible
Hernandez, people. Nick DeLeva, and then the leadership of the veterans of John Melby and Joe Madden.
Yeah, it's great.
We
had an all-star team.
It's like
91, 92, 93 Bulls. It was incredible.
Yeah. Like several of probably like the top 5, top 10. Carbon mines in the world are at one company working, 20-hour days.
We didn't put it down.
Amazing.
Yeah. I mean, the pandemic kind of helped because I had a child at the same time. Right? You had a child at the same time.
I did, yeah. It was crazy, yeah.
We're just working crazy
in
hours.
The delivery room talking about N-GEO and
Yeah, I had COVID the day that the N-GEO launched, and I was dead in bed, and I remember like the phone just not stopping, and I just like dragging my carcass around to effectively ensure that we could have, everybody wanted to get in on the first trade announcement. Blocks were being structured. There was just so much enthusiasm, and it was just like, I will maybe die tomorrow. And it just kept going. It was incredible. I don't know how we made it through that time.
Yeah, and looking back now, it's the same fundamentals still exist today.
I know,
right? Like it's the same demand projections, same supply issues that are getting tighter with the type of credits we're looking at now.
Yeah.
It's just there was it moved so fast, and we had so many players in, and it was obviously then with Ukraine, it was kind of like a big halting moment where.
Yeah, it was this kind of sobering moment in capital markets. I think the other thing that we weren't necessarily cognizant of the collective we in markets in general, was the stimulatory effect of the Fed positions, right?
Yeah.
There's just like really stimulatory in quantitative easing, and then stimulus checks, and effectively just cash just entering the system, and effectively you had Web3 like world going crazy with in the Bitcoin, the NFT space, commodities were trading great, and then you have this systemic shock to the energy markets, which is the literal artery and lifeblood of financial markets, and effectively the industry just went risk off in a very quick time frame, and effectively it affected everything. It affected every market, and effectively carbon was no different. And that was interesting, because up until that time, carbon was not correlated. Can I just point that out? Carbon was completely removed from fundamentals of every other market, and essentially all of a sudden it's correlated. So there's a downturn across everything else, and carbon went along with it. It was an interesting time to see.
Oil, it was like inversely.
Oh, well, I mean, oil famously went negative because of the physical cost of storage as well, right?
Well, yeah. So I was managing WTI when it went negative.
Yeah,
that was the beginning of COVID.
So beginning of COVID, yeah.
And we had 10 to 15%, some days with 20% swings up and down.
Yeah, incredible volatility.
And every trader in the world had to move home and trade. Most of them.
Yeah.
Right. So you had the entire trading community leaving their desks, volatility 15, 20% price moves in every day. And, speaking to a lot of traders, the Ukraine had a much more significant impact on firms, on margin, than any of that around negative price crude around COVID. It was a massive event in the commodity market.
It's huge.
Yeah.
Yeah.
And
for Europe, I mean, I lived in Berlin at the time, like from an energy security perspective, it was incredible. So the world just was inverted upside down as a result of it, because it hit literally the lifeblood of the market globally.
Yeah. And traders have the value at risk. There's only so much you can trade. And if that's going to be diverted into nat gas that's having massive moves, especially, these are global markets. So
the TTF contracts was incredible.
Yeah. And then it's going to hit the Henry Hub in the US.
Yeah.
So, that we saw the market plateau. We've seen it come down with the media scrutiny, and now, the firms that came in to trade haven't left. In fact, we're onboarding. We had a record number of onboards last year, even though 2022 volume was lower than 2021. But now they're taking their time, which I don't think is a bad thing in the long run.
2022 numbers were pretty close to 2021.
They were over 100 million.
Yeah, I think it was 121.6 and then 119.4, something that
pretty close.
So like 100%, like, it was the same.
Yeah, after growing fourfold from the year before.
Oh no, but that was just off a low base, So people sort of throw that number around and kind of give us credit for which is, you get lucky by putting in the work, no doubt, but there was luck element in it as well, just in terms of timing. We had the right infrastructure on the CBL side, but the market was at a fairly low base. I think what the ushered in that paradigm shift on the CBL side was COVID. Effectively, the market were trading bilaterally, with people talking to one another, and the world being fluid and mobile. All of a sudden, everyone's at home doing Zoom calls, as you said, and essentially that just drove liquidity onto exchange, because they were like, well, I don't really know you. I want to have counterparty confidence. I'm going to clear it all through the exchange. So we went from 10 million in 2018 or 2019, 2020 was like 30 million, so 300% growth, and then 21 was like 120, so 400% growth. It was caught everybody off guard. It was an incredible time. 22 just kept the momentum despite the headwinds. I think Q1 was the most impressive time to be in the market, because that volatility led to so much liquidity. It was incredible. I think we had 41 million tons transact in that Q1.
Yeah,
that was the record, apex for us, and that was post. So like February was the Ukraine war. We closed out that quarter in March, and the liquidity kept going because there was still optimism. Despite the volatility, there was, on the buy side, folks that saying, "Hey, look, we're on the bid side still. If anybody's distressed, we're buying." And it was just a really interesting time.
Yeah, and like even this year, volumes are down significantly, and it's we track the market. We're an exchange, so like the Vera issuance of credits is the same curve as like the C.
Retirements are pretty. I was looking at the retirement numbers; so they're pretty good.
Yeah, they're good. And this year we set another record of number of participants. So it's not, they're still there. Everyone's just kind of standing around the dance floor, like waiting for the right song to go. And that's what we're discovering at COP right now. Like, what is the right song?
I was about to say, I think COP might actually put on the right jams.
I hope so. And I think there's a lot of positive, the registries working together.
Yeah.
When we think about things like security, that's going to add a lot of credibility and a lot of stability to the market.
And so you're referring to the regulatory oversight? So CFTC, there's a lot of work
that as well.
going on?
Yeah, I was referring to like CAR, ACR, all the leading registries collaborating, starting to work on some common standards.
Great announcements this week out of COP,
Yeah.
right? In terms of that coalition of the willing, effectively.
Yeah.
Talked to Mark Kember from VCMI yesterday.
Yeah, exactly.
And you know, like they had the claims code come out just before COP, which is really stimulatory. Then we have the alignment with the ICVCM, SBTI, and
right.
effectively that galvanized, you know, the market. It's been really palpable here. And then you've got CFTC effectively coming out supportive. You've got John Kerry coming out and saying, you know, carbon is the largest asset class that you've never heard of. It'll be the largest market in the world. Super supportive. You've got essentially alignment here in the GCC around supporting carbon markets as a solution to help to at least balance, but also, you know, facilitate towards decarbonization more broadly. This mega trend of decarbonization is not going anywhere. Yeah. And if anything, COP has been super supportive on Finance Day, which was essentially co-opted by the VCM ecosystem and they just called it the VCM Day. Yeah. Because announcement after announcement after announcement, it's really positive. Yeah, as we exit 23 and we go to 24, right?
Yeah, and just following the headlines, you know, it was kind of rapid adoption and growth. But at the same point, like we're getting close on the ICVCM. I mean, those efforts with the task force started years ago.
Oh yeah, and it moves super slow, but it's deliberate.
And it's coming. But now we're getting to the point. We're getting to an inflection point. I truly believe that, you know, next year, late next year, whatever, 2025, in the next 1 to 2 years, we're going to be there. We had the ICVCM.
I completely agree, Russ.
What's that?
I completely agree with you. I think that there's a lot of folks that came into this market in 21 let's say when the party was going, right? In 2021, late 20, and effectively there were new participants into the market, and they were, you know, thinking this is great. And then the market effectively, you know, didn't grow at this exponential growth rate, and they were like a little bit disappointed, saying, "Oh no, what's going on?" The veterans in this market have lived through a number of winters. This is no different. And I think the market, like you said, the numbers is not, you know, this decay in terms of the volumes. The volumes have decreased a little bit on the liquidity side, on the trading, but the underlying like issuance and retirement numbers are still very resilient. And if anything, I think this is the calm before the storm. Yeah. Right. 2030 is coming, and carbon markets have a really significant role to play. Exchanges are that central liquidity pool, and as you said, it might be, you know, there's a lot of forecasts around that time frame. Yeah. It's anybody's guess, and you know, there's a lot of kind of prognosticating. I'm no longer bound by, let's say, institutional kind of limits. I don't want to put words in your mouth, but I'm really optimistic. I was saying to some folks yesterday in this market that I actually think 2024 will actually be a really significant year.
Great.
So let's see what the tape says.
We're getting close. I think you could definitely see the back half of 2024 things picking back up.
That's where I'm sort of willing to bet on.
But even like, you know, back to how much time this is taking, how thoughtful. ICVCM, yes, like the collaboration with VCMI, like those standards have all been building for some time. Even the CFTC had 2 massive in-person convenings. I presented this past summer down in DC on it. They've been doing research. We spent a lot of time with the CFTC in terms of providing data, going through the market.
So you're the master teaching them. I'm glad it's you, not me.
No, but they took 2 years to come out with that guidance.
Great.
It's not, you know, they need to be thoughtful and approach it. And now you have a major regulator that's saying, these are the quality standards, the high level standards that registries need to adhere to. You have IOSCO coming out with guidance. So like you said, the 2030 is a massive target in terms of net zero commitments, but building up to that, we have all of these other integrity standards. We have Corsia, we're entering the compliance phase. We have Article 6. Hopefully we get more clarity by the end of COP, by the end of next week.
I'm hopeful. It may or may not happen, but hey, you know.
But what it's doing is every country is thinking about carbon markets.
Yeah, look,
so that's why we're not sleeping this week. It's because every company is thinking about registries, tradable markets. You know, we just had this partnership with the Johannesburg Stock Exchange.
Yeah,
and it's proliferating around Africa. We're having these conversations, LATAM, Asia. Countries realize that we're going to have kind of the next, you know, it's the next CDM, the next Article 6 market. How should that relate to their domestic market? There's a revenue opportunity for all those countries with corresponding adjustments.
Right? Yeah, it's really exciting. And you sit at this incredible nexus, Russell, you and the great team at Xpansiv, which includes not only the CBL exchange, but the APX registry ecosystem, the EMA portfolio management, the data that's derived from across all of those different platforms. You've got the brokerage, let's say, liquidity drivers, the CFS, and you know, it's incredible. So you see that this incredible vantage point. But what I'm seeing here is this paradigm shift occurring, as you outlined. Under Article 6, I think this is the biggest opportunity that this market has ever seen, and it's an infrastructure build. There's national exchanges being built. You referenced Johannesburg Stock Exchange as one of the clients, essentially, that's leveraging Xpansiv technology. But you also have registries that are being built right now at a national level and a jurisdictional level. Let's call it a multinational level, I should say. That's being built. That's the plumbing that effectively underpins the market.
Yeah.
That is currently being built. So maybe there's a latency there, and as that plumbing starts to get into place, it's no different to infrastructure, right? Then you can actually have it to scale.
Yeah, the more we speak with local exchanges who we partner with, and we'll also continue to partner with governments, coalitions around these different regions. Everyone understands the importance of standardizing even Article 6, the letters of authorization, and countries, even some of the very active countries that are involved in some of these early transactions, they don't want that to be a one-way trade. They want optionality. They want you to be able to retrade an Article 6.2 credit. We don't know what exactly that's going to look like. The registries are going to have to somehow talk to each other. We're going to have to figure out, how we price them, how we market these credits. But I think we're seeing some really strong momentum here at COP around that sentiment that we need standardization around these, and these are legal documents that have to be approved at the state national level. That's not an easy task.
Yeah, it's incredible to see that. It's exciting to be in this ecosystem at this time. I mean, you're sitting in that incredible nexus, and you're a steady pair of hands here, man. I'm so confident for the market because of where you're sitting and your expertise. What I kind of bring it back to is these paradigm shifts in technology cycles. So you look at Web 1.0 and then shift to Web 2.0, and then the disruption of that Web 3.0. I think carbon's in that 1.0 to 2.0 transition.
Sure.
And I still argue for some of my old mentors, the folks that have been in here for 3 decades, maybe they came in, in the very early days. But it's like that. These technologies scale because of that infrastructure, the protocols that went into the Web 1.0, et cetera, enable compression algorithms in Web 2.0, and Netflix to scale, and Google, and all these sort of different things. These companies change the world. Yeah. Carbon's at that stage right now where it's just about to explode, and it is ubiquitous. Can I just put that out there, that effectively carbon is involved in every single transaction and input in the world. It is ubiquitous across every asset class and financial market, and we have one atmosphere. That's why. Yeah. And we all share that one atmosphere, and we have a limit and a budget to constrain to, and that's coming up.
Yeah,
in 2030. 100%. So, just in terms of how things progress from here, Russ, like as a sense of optimism, I think we've been discussing this kind of back and forth. What are your hopes, as we end 2023 and enter 2024? What would you like to see on your Christmas list, let's just say?
I think we're going to see it. I think we'll see ICAO approve additional registries in March.
I think so,
right,
too.
For Corsia. Right now there's no deliverable supply, although they've approved a few registries. There's no LOAs issued, ACRs. One of the approved registries, there's no LOA from the US government yet.
Well, that's because ACR has this dominance of supply coming from the United States.
Yes, exactly.
It's fairly difficult for the US, being such an advanced economy, to effectively allow for export of emission units. Yeah. Because essentially they're going to have to make that up through Article 6 markets.
Exactly. Yeah, but then there's debate. There's debate here at COP about what the U.S. will do.
Yeah.
But very smart people that are exposed to the U.S. markets on both sides of it. So we'll see.
Yeah, completely. And that's
but again, another exciting development in COP. We've seen the first credits with LOAs start to get listed on registries. We're working with some suppliers on how do we start thinking about things like auctions around these credits and start the price discovery process. So those credits are going to be issued this year, probably ready for screen-based trading as early as Q1. Great. So we're going to start to have that price discovery around contracts that have LOA. That's a very important step to get to Corsia and get to Article 6. And then once we hit March and ICAO approves additional standards that have that supply, then all of a sudden we're into a kind of a new compliance market.
Yeah, I agree. And I actually think that there's, I completely agree with you in this across that thesis. So for folks that kind of are new to this space, but like on the Corsia kind of framework. It's they have phases. It's phase implementation is the kind of nomenclature. They had pilot phase and now phase one. The pilot phase was essentially usurped because of the pandemic, effectively grounding the fleets. And so that, although that was where we launched N-GEO at the time, there was an expectation there would be demand. The grounding of fleets kind of went counterintuitive to that. But now phase one, which is 2024, 25, and 26, air traffic, unless there's another black swan event, will continue to grow.
Yeah.
There's still a dependency on hydrocarbons to get that uplift and flying these long haul flights. Sustainable aviation fuels remain constrained. It would be obvious to most traders in the space that there's going to be a dependency for that industry on carbon markets. And as you said, ICAO is now expanding the universe of eligible units under the criteria set that they've got. The demand is going to be there. There's some estimates anywhere between 150 to 250 million tons of demand coming in. Compare that to that's taking out on an annualized basis just from that one sector.
Yeah.
Compound that with demand coming in from the intra-government transactions, and then private sector actors substantiating net zero. All the ingredients are coming together for another perfect storm.
Yeah, and you have certain disclosure requirements that are become mandatory in 2024.
So in California?
California, but also IFRS, something like 140 countries that use that accounting standard. Firms are going to have to start accounting for their carbon emissions, and then over time, they're going to have to start accounting for net zero targets. So even if it's 2030, you're going to have to start putting that into your, I'm not an accountant, so I'm not going to probably use the right term.
No, it's okay.
Right?
Neither am I. My head's spinning.
Yeah,
right
you're going to have to hand it over to your accountant, right? And you're going to have to.
But what, no one's saying just any accountants. This is the big four. These are the accounting firms that underpin the financial ecosystem. They have audit rights here, and they have obligations for disclosure.
And as a company, when you start mapping that out, you're going to realize that you have a liability on your books.
And
right?
that's exactly where it is. Now we're moving from this voluntary to compliance paradigm to effectively, hey, this is a materiality risk for companies on their balance sheet in terms of disclosure. Many of them with regards to listing on public exchanges for the trading of securities. Then you've got compliance obligations under CORSIA. You've got Article 6 compliance as countries enter this ecosystem. All of this convergence is going to just create this perfect storm for liquidity to take off again.
Right. Yeah.
So great. So let's hope for that to be the case, because now once we price carbon, we can actually now utilize that as an externality to help to drive down emissions at scale, which is really the key here, because we have that finite carbon budget, and then hopefully that can facilitate the energy transition. And I think Xpansiv sits right in that nexus in terms of that ecosystem, providing across all. And we just talked about carbon. We didn't even touch we just see the tip of the iceberg.
Sure.
Xpansiv also operates the North American Renewables Registry and plugs in now to IREC and to a number of other renewable energy certificates. And you've got other environmental attributes coming onto the ecosystem. It's going to be a pretty interesting company to watch.
Yeah, and RECs are having a record year because it's the way that you measure it is cut and dry. If firms have to make if they make decisions about the internal budget constraints, just because what we discussed about, discuss the high interest rates, economic constraints. If they may just focus on scope 2 if it's the easiest. So we've seen a significant pickup in RECs, but we also are seeing in renewable energy credits, both domestic and through IRECs, through our partnership with the Evident Registry. But now you're seeing things like these transition credits coming out of COP, which are really interesting, because this is what a lot of the US renewable energy credit traders are talking about, is not every REC maybe should be treated the same. You should look at what is that REC displacing? And that's looking at what's the ton of carbon at a location at a certain time. So if you're going to a grid that is coal-fired, that's going to have a much more significant impact. And that's what these energy transition credits are.
Completely.
So the more I've learned about it this week, you have the renewable asset around, feeding to the same grid as that coal-fired plant. And then you're saying that coal-fired plant has to be shut down by a period of time. It seems like...
Can I contextualize that?
Sure.
You're absolutely correct. This is the sleeping giant in the energy transition.
Yeah.
I reside in Singapore, as you know well, and McKinsey commissioned a working paper with the Monetary Authority of Singapore just recently, and to their credit, they consulted with a wide array of different proponents in the market. Xpansiv was a respondent. I was part of that response to them at the time when I was with Xpansiv, and I still am, for the record. I'm a strategic advisor, and it's a pleasure to be in that role. But but effectively, it is that to leverage financial solutions to facilitate in that energy transition, and looking at those energy transition credits as part of a broader ecosystem in the grid in the ASEAN region, but also in the Northeast Asian cluster. I'm looking at China in particular. There's a real dependence, let's put it, on coal, especially in Indonesia. The difference to the advanced economies of Europe and North America is that they are, let's say, new in early life cycle of those assets. So those owners of those asset classes, of those assets, the coal-fired power plants, need incentives with which to actually transition them and switch them off early. Carbon is the bridging piece that's been missing, because you can now replace coal-fired power plants in the grid with renewables through green bonds and others, and kind of infrastructure spending. We're here seeing COP, the IEA advocating for tripling in renewables, and that's great. But how do we switch that brown electrons, the dirty fuels coming into market? Carbon plays a key component. That has barely been scratched, right? So that's coming in the future, and I don't know how long it takes to deploy, but that's a significant question of supply, I think, for Article 6.2 in particular, potentially 6.4. But the rules are still being defined around that. And that's a sleeping giant. Imagine unlocking that in India, in China, in Indonesia, which is just in my side of the world, let's call it. And now you look at your side of the world, let's call it hemispheres, because you're based in New York. Look at Latin America, look at North America in particular as well, and dependency and transition from coal to gas in certain regions. It's incredible.
Think about Africa. Think about that. I was just in Johannesburg 3 weeks ago, and you have rolling blackouts, massive power generation, coal-powered power generation. And you're seeing renewables pop up all over the country, but it's not just to generate renewable energy credits. A lot of developers aren't even generating the RECs. They're just doing it. They just need to run the water filtration systems. And
and I mean, look, maybe we could talk about this for hours. I'm conscious of your time, man. As always, I guess this is a preview to people that maybe that couldn't tune into our Zoom calls every Thursday. But I enjoy always chatting with you, man. It's a pleasure to see you. I'll see you hopefully in New York in the new year. And Russ, thanks again for everything you've done for this market, what you continue to do. You're an inspiration to me and to others, and I'm super grateful for everything that you taught me about derivatives. As I taught you about VCM, which is pretty fundamentally easily.
Teach me about
no,
VCM.
Man, come on. You're being effusive, but on the derivative side, which is much more complicated, and you kind of taught me a level of sophistication that I didn't have at the time. So thank you, and I want to continue to obviously have these kind of dialogues with you and your team.
The industry, the market is happy that you're telling these stories, and then we're making this clear. Around PAP.
We're trying to.
You're the godfather of carbon.
No,
right?
I'm not.
That's what I've been referring to you as this week. To everyone that's like, hey, where's Rene? And I'm like, the godfather is out. He's working on carbon exposure, working on his next project too.
Yeah, fair enough. No longer.
But we need to, I think what we need to do, just so as a last point, is what you're saying about financing renewable projects, financing, reforestation, cook stoves, all these things. Like, we need to stop thinking about this as carbon offsets and remind everyone that this is carbon finance. I think people get lost. They think, well, an energy company is just buying an offset. Like, they're financing an emissions mitigation project with positive community impacts. How is this a negative thing? And if you just pull back from all the, and some of the scrutiny is helpful. Like, we're going to get better standards. We're going to look at projects in different ways. We're going to have digital MRV and all these technology. But in the big picture, this is a good thing, that we need to hit climate goals. We're going to make the world, like, not to be corny, just a better place in general. And it's a free market solution that the private sector is going to pay for, and it's going to generate revenue for governments.
It's a win-win-win.
It's a win for everybody.
Yeah. Couldn't have said it better myself. Thanks, Russ. Appreciate it.
Yes, thanks for having me.